Good afternoon. This is Tom Alexander. It is Sunday, October 16th. It is about 3:26 a.m. or p.m. Eastern Time in beautiful Charleston, South Carolina. This is the video addendum to the written report that I send out every week. If you find this video and you're not on the list for the report, if you'd like to receive the report, shoot me an email, tom@alexandertrading.com. If you find value in the content, please like it. Please subscribe to my channel. You'll be and then hit the notification bell, and you'll be notified when I post new stuff. Okay, if you want to save yourself some time, you can go back and listen to the previous 2 weeks videos that I've done because it's almost the same. Let me show you where we are. Now, this pretty much encapsulates. This is a weekly chart. And if you look at the last 3 weekly closes in the SPX, they're clustered right here. We have had an attempt to rally sharply. We've had an attempt to crater. And we keep coming back into this general area. So this is the area over which there is this huge battle. I guess it would be helpful I show the screen here, which I'll do now. Okay. So again, this is the weekly chart of the SPX, and we have 1, 2, 3 weekly closes within this area. We've had the attempt to rally very sharply, and that occurred last Thursday. And then we've had an attempt to break down. We had an attempt to break down on Wednesday before the bungee jump on Thursday, and then we had a crater on Friday afternoon. So which way this thing goes from here, guys, the next 5% move in my mind is a guess. I really don't know. It is potentially very bearish, obviously, if we start trading below last week's lows in all 4 of the indices. That's important. I think it's very bullish, at least short term, if all 4 of the indices begin trading above, and especially if they close above Friday's high. That's it in a nutshell. We trade price action. We are traders. You're going to make money based on price going up if you're long, or price going down if you're short. All the exogenous noise, and it's unprecedented, both from the technical people, the macro people, and then just the news backdrop. It's an extraordinarily noisy time period, and the market is reflecting a lot of that push and pull and that uncertainty. The big money, the institutional money, the people that drive the market directionally, are either not in here, or they, at the moment, the big buyers and the big sellers are canceling each other out. Now, the more we stay coiled in this tiny range that we're in here, the sharper will be ultimately the break. Now, we've had a false break up, we've had a false break down, and we're right back into the middle between those two. This is an area, let's just see. And this is, this may not be to the tick, but it's going to be close. Okay, so we're in about a 56 handle area for the past 3 weeks that the market can't sustain anything above. It can't sustain anything below. We may get a clue in Globex. I don't know. The other indices are showing the same picture, more or less. There is, and this has been part of the conundrum in trying to figure out what is going on here, because we have all these divergences going on. But continue to believe that there is going to be a resolution very, very soon. The Russell is of particular interest, and it actually has an even tighter cluster of closes over the past 4 weeks. It's quite remarkable, really. And this is the area in the Russell. And you can see we closed right there, right in the middle of this critical area. Now, and this is something that those of you that have followed my work know that I've said over and over. I find it amusing when market pundits, forecasters, gurus will take each of the 4 indices and have all these different elaborate targets, different Fibonacci retracements or Elliott wave counts or whatever it is. The reality of this is these things are extraordinarily highly correlated, and they have been my entire 38-year trading career. When there is institutional conviction, they're all going to move pretty much in lockstep. So it is pointless to try to parse out to the tick where the S&P might go, where the Russell might go, where the index might go. We're on the cusp. Of course, I've been saying this now for 4 weeks, but we're on the cusp of a really nice sustainable move. And when that move occurs, everything is going to go in that direction, whether it's up or it's down. I don't know which it's going to be. I can make a bullish case. I can make a bearish case. And that's the same with this view. Now, VIX has continued to be stubbornly high, and the 10-day moving average of where VIX is now is right at its highest level. The absolute spike in VIX is not as high. We haven't had a spike above 35 yet, but that's coming. If VIX is, in my mind, VIX is also at one of these levels that's reflecting the position in the indices. It's going to move. We're going to get this massive spike up in VIX, and the market is going to crater. We may have some sort of 2, 3, 4, 5-day waterfall decline, or we're going to begin a furious rally, and we're going to see VIX level off and drop down below 30 again to one degree or another. This is also reflected in our breadth work. Breadth was extremely negative. It was negative like 6 or 7 days in a row heading into last Thursday, got the big bungee jump and had an immediate fail. So, I can go through this and parse it out and make a bullish case or a bearish case, but it's not clear. What the clearest thing about what I'm seeing here is that a sharp move is imminent. But again, and I fully confess, I've been saying this for 4 weeks now. It's just an uncertain market period with a ton of exogenous overhang over the market. You have this incredible push and pull, among the big money, bullish or bearish. So we'll see if we get some sort of resolution. We'll see if it starts in Globex. Okay, let's look at some other stuff. The dollar made a temporary top and had a dramatic decline on Thursday. And then guess what? On Friday, it retraced almost the entire amount, not quite. So the immediate downside key reference area is near 112. Gold has been sort of like the stock market. Everything is so highly correlated now. We had this big rally and it looked like gold may have V-bottomed. And then last week we had a big rally and then a big fail on Friday. But as I pointed out last week, and this is reality, it's very clear. Gold is making lower lows and lower highs. And until that changes, the trend in gold on an intermediate term time frame is down. Notes and bonds. Again, reflecting the binary, highly correlated nature of assets right now. Had the big rally on Thursday, and actually that began to fail. Then it failed big time on Friday. Now it looks as if the long end of the interest rate curve, the 10-year and the 30-year, want to go to new lows. Let's see, what else? We've covered the dollar. Oh, crude. And again, risk on, risk off, binary, black, white, yes, no, 1, 2, 0, 1, you get it. So if crude needs to reverse, take and close above Friday's high to restore an immediate bullish outlook. If it falls further, where it stops in here is a guess, and maybe it forms balance. That's what I put in the report. Guys, hope you have a wonderful week. I'll speak with you soon.